Hello, everyone. This is Justin Smythe from nextbigtrade.com. This is your focused watch list for January 19th, 2024. As discussed in the newsletter, two sectors to be on the lookout for new breakouts next week would be home builders and artificial intelligence stocks. And then there's one sector that's acting. There's a number of sectors really that are acting a little bit weak with this market right now, but the oil and gas stocks showed a lot of relative strength weakness during the October-November rally, and they might be a good sector to continue their rollover if the market remains weak. So we've got some longs and some shorts this week, and we'll see which way the market tends to move heading into next week. Starting out with the home builders, you can see they started their uptrend right when the S&P 500 bottomed in late October. You see the increase in volume here. Then again in December, when things started consolidating, that's exactly what the home builders did. But now this is a bullish consolidation. You've got, tight volatility, no really high volume selling, and then you've got holding the 20-day moving average. So this is set up to break out heading into next week with more market strength. Same thing with DHI, similar pattern, consolidation, right at the breakout level. And LEN doing the same thing. Another interesting aspect of this is that, when all the stocks in the sector are doing something similar, that means that there's internal sector strength because you don't see any laggards breaking down. They're all acting bullishly. So that's bullish for this sector. This is definitely set up for positive action next week if the overall market cooperates. And in this stock in particular, you can see a little bit of volume here and then a little bit of a volume increase on Friday as well. Moving to those artificial intelligence stocks, these are the ones that had the massive volume in November. Then they started selling off in December, started consolidating. Actually, some of them got weaker in January and pulled back even more. SYM is one of these, but it's still holding the gap area now. So now we've basically retested the entire gap. We've filled it on lower volume. If we see a pickup in volume here, we could just resume this breakout. So this is poised to potentially follow through here, and we'll want to see the relative strength obviously move back higher as well. Path is one that showed a little bit more relative strength. You can see the breakdown here in early January, but we're still holding the gap area. Tight consolidation here. If we get a move higher, that would potentially resume this rally, and we've got a little bit of volume coming in on Friday. UPST, this one has had multiple monster moves when these stocks started heating up. You've got, again, another consolidation, a little bit of an increase in volume, and we'll see if this continues higher heading into next week. PLTR, this was really one of the original stocks in the sector that broke out on massive volume, rallied for a couple weeks, but then just tapered off, consolidates. Now it's got like this tight consolidation pattern, a little bit of an increase in volume on Friday, again with everything else. We'll see if this breaks out next week, but you've got another potential setup here, another gap fill on lower volume. So it's just taken this whole pullback a while to occur, but we could still break out again from here. Finally, Upwork. This one was one that broke out, again in the same time frame, and then tried to break out even in early January. But again, the market was not cooperating, pulls back down, and need to see some volume here. So really just indecision, but we could still set back up here in this pattern. And, volume is really what needs to occur here. We need to see the buyers come back in and move back into this market. Now, turning to the short side, these oil and gas stocks, specifically ones that are natural gas focused, you can see how they, coming out of the October correction lows, they were already kind of moving sideways and immediately started breaking down, broke down all the way into November, kind of had a counter trend rally in December, moving against the rest of the market, and then broke down again this week. So a better setup here would be to see a little bit more of a rally back towards the 50-day moving average, and then a rollover back lower, potentially for a short setup. And a lot of these are moving below yearly support levels potentially. So if they can roll over and have no support, you've got, less support to hold these stocks up, and they can just resume their downtrend. OXY is one that's already right down to that support level. So if we can see a breakdown here, then we've moved through all this support that's been in place for like about a year now. So perhaps a rally back to the 50-day moving average and then a rollover lower. And finally, DVN is actually one of the weakest ones here, where we're already breaking down below support. So this is, a good setup where if we do get a rally here, this would be a good short setup. And then, perhaps just continuing lower. Notice how just no strength here whatsoever, especially in November. And then in December, it rallies back up to the 30-week moving average, 150-day moving average, and then rolls over again. So a lot of weakness in the oil and gas stocks. Really no buying pressure whatsoever for a while now. And a weak overall market will probably help move these lower. So in terms of short setups, this is a good sector to look at. And in terms of those long setups, keep an eye on the home builders and artificial intelligence stocks heading into next week.